Good afternoon, traders. This is Christian Farmer. It's Traffic Trade Group, and this is your end of day market recap for Thursday, May 15th. It is now halfway through the month of May. And some interesting themes to talk about for the day. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that we're going through is for information purposes only. So to just sum up a couple themes for the day really quick, indices were a little bit under pressure to start the day, particularly on the growth side. I think I had mentioned that. Well, actually, I'm sorry, I didn't mention that in yesterday's video, but we were watching CoreWeave rally, I think, during yesterday's video. And then, probably about a half hour later, the stock actually gave back the gains. My thoughts, and I shared this with the trade Tribeca Trade Group trading room yesterday. I was like, huh? I was like, maybe we start to see a little bit of a pullback in growth names today, and high growth, high momentum names. And we did get a little bit of that early on. But what I found very interesting, which is always kind of the second part of whenever I'm going over this and what I think what I think could or may happen. The second part is like, okay, these things may see a little bit of a pullback. How deep will the pullback be? And I think that when you see the price action for the day, just kind of felt like for now, there are more folks that are under positioned in this market and the equity market that then are taking profits, because it did feel like a little bit of buy the dip. And I think also when you look at the last 2 days, the MOC, so market on close, which again, typically, that is where a lot of the institutions will, for example, like what institutions? Usually folks that are in like your Fidelity, right? They've got a lot of mutual funds, right? And whenever they're doing buying, they're not really doing much buying during the day unless it's for some of their more active funds or maybe if they manage some more actively funds, but for their where they can trade intraday. But if it's for mutual funds, I know you don't hear that term too often anymore, about regarding what mutual funds are doing, but all of their buying and selling happens on the close, right? Because that's the NAV of the fund. So that's what determines it is the closing price. So all of that has to happen on the close. So where am I going with that? Almost $6 billion to buy today. I think it was around 5 billion yesterday. These funds are under positioned, and that's why you're seeing these big MOC imbalances. Maybe they're a little bit late to the game, but that's also why you see this buy the dip mentality right now. Now, we'll have to watch to see if it changes. Um, We'll have to see if that changes. Speaking of CoreWeave, I think NVIDIA reports 7% stake in CoreWeave. I knew that they owned some of it, but I didn't know. Maybe that's an increase in their position. I'll have to check. All right, so you can see CoreWeave is starting to move here. That's a good name to start off with. This is kind of interesting, what this name is doing. It really ramped into the earnings report, and it's kind of consolidating a little bit. For now, it's holding the 5-period moving average. That's exactly what I would be watching for now to see if this name wants to do, just continue to go up and to the right. It's interesting, of course, because this is a newer name, and there's not a lot of resistance. The lockup period won't be for a while, so perhaps this name could trend higher like this. And again, I think this is when you have these newer names, newer IPO names, they're kind of a little bit of a proxy for growth. So in any event, so there you go, some new news in this name. Let me get back on track for a second. I talked, just to kind of also mention what I talked about in yesterday's video. I talked about how bonds were getting all this attention. I don't know what the trigger was for everybody tweeting on social media as well in the as well as in the regular media yesterday. I don't know why bonds all of a sudden got so much attention, but it's funny because I had mentioned in yesterday's video, I was like, it's not that big of a move. I don't know what people are getting that excited about. And sure enough, TLT was up 0.9%. Now, am I saying that you don't have to worry about bonds and what TLT is doing? No, I'm not saying that at all. I'm just saying we're not, usually things are more precarious, more troublesome when things move very quickly. I would not classify this as a very fast move so far. We have not even taken out the lows in TLT. So I am not concerned about this as of yet. Will I be watching it? Sure. But I also want to remind you too, which I don't know why that this doesn't get any attention. But again, I like to point out things that because I do feel some of the things that you hear on social media or on regular financial media, I just like to mention when they're they're exaggerating things that you may not necessarily have to worry about. So what do I mean by that? Well, let's look at where the bond yields are really quickly, and then we'll move to some stocks. But the 10 years at 4.435. Now, the 20 and the 30 year are a little bit higher. What do we know? So if this is like, because this is what I heard this morning. Oh my God, this is very concerning about how high the 10-year yield is. Why, what does that have to, I'm not sure why that has to be so concerning. Yes, that means that we're paying a higher level on our interest rates, but that means if you're concerned about that, that you should be really concerned about what the Fed is doing, which is holding the interest rate at 4.5%, right? Artificially. It doesn't have to be that high. So I find the ones that are yelling from the rooftops about how concerning high yields are on the long end of the curve, why are they not talking about it on the short end of the curve? Kind of interesting what people want to, have as political narratives. But in any event, I'll move on. I just thought that that was interesting because all along for a while now, the short-term interest rate has been 4.5%. I guess that doesn't concern many. It does concern me. I try to be, really upfront in these videos, and I've said this before. I probably said this about a week ago, and I said, hey, I'm not comfortable with the interest rate at 4.5%. Because normally when you see if it's really going to be a major growth stock rally, like, more than a couple weeks, I think rates have to come in. And liquidity has to be inserted into the market. Now, that's not the only factor, but I do believe that that is necessary. So, I'll move on from this, but yeah, it does why I haven't like completely embraced or leveraged my account going long into growth names. Like I see a lot of people on social media doing. Congratulations to you. You must have done very well doing that strategy. I haven't been able to do that because it's very different than the market that we had, let's say, back in 2020 when all kinds of names were going up. Back then, the Fed reduced rates all the way down. They cut interest rates. They were providing all types of stimulus. We don't have that situation at all right now. So I am participating in growth stocks and I'm trying to, catch as many catch some of the moves as we can. But that's for me. And again, you may sometimes, having these ideas in your, or having this experience sometimes acts as a little bit of a detriment to your performance. For example, if you've just been following price action, right, and not worrying about such things, then you probably have been doing a bit better. So I always will try to share these things for you. And by the way, thank you for watching these videos. I should mention that more, but I appreciate you guys, tuning in, and listening to my, 15 to 20-minute videos per day. SPY, still above the 5-period moving average. Is it a little bit extended here? It is. I ultimately think that we could rally up to this VPOC, which is about another 1.7% up. And I think that's where we may see another pause. But there's something that, again, we don't have to get there in a straight line. We could see some backing and filling because we've had quite a week, 2 weeks in the market. Qs, we're sitting here also pretty extended away from the 5-period moving average. Wouldn't be surprised if we come back down. But like I said, when you see those MOCs that we've had the last couple days, I can't tell you if they're going to have another one of those tomorrow too. Reminder that tomorrow is options expiration. VPOC upside, where I think we could pause, is right around 525.90. IWM, I like what IWM has been doing here the last couple days. It's been a little bit more just digestion and a nice little candle today. Notice how it's not as extended and it's been resting a little bit. So even though this is more technically challenged because you got a longer way to even, in terms of like getting back to the 52-week highs, nothing to say that it can't come up and test that 200-day moving average there in IWM. Also, as I mentioned in yesterday's video, sorry to repeat, but I said if bonds rally a little bit, that alleviates the pressure in IWM, which I believe is a little bit more sensitive to interest rates. All right, so a couple of things that I wanted to talk about in terms of strategy, right? Being that I had up the movers and I had the names that went down. Now there's a decent amount of names like that went down, and this is the way growth stocks work, right? They don't just fall like 1 or 2%. Sometimes they fall 4, 6, 8, 10%. Reddit was down 9%. Reddit looked like a pretty good chart yesterday, down 9% today. Affirm down 8%. Coin 7%. Now Coin had some news. DraftKings 4%. Mobileye down 4.7%. MSTR down 4.7%. So, you know, whether you it's I so this is personal preference about whether you can handle that volatility on a day-to-day basis, because we certainly saw that if you rewind a month ago, and I'm not saying that we're in the same market that we were a month ago, but these names would go down like this every day, and that's not easy to deal with. So what I would say is, what I try to do in my portfolio is to have, in my trading account, for one, I try not to get over like a huge number of positions. Like once you start to get around 8 to 10 positions, it's going to be tougher to manage the names. And if we have a day or two like this where growth sells off, do you want to be dealing, and if you're more concentrated in growth, do you want to deal with 6 or 7 positions that are down 4 or 5%? It's a judgment call. If that's is okay with you, then you carry on and do what you want. But I think a lot of folks, when they see that many names down, 4 to 7%, they're inclined to play a little bit more defense than offense. So, however you like positioning in your portfolio, I like to have a couple growth stocks. I like to have maybe a couple of value stocks too that have been doing really well. It doesn't have to be all growth for me, right? No one is putting out a mandate and says, Christian, you got to only own growth stocks, right? You could do whatever you want as a retail trader. That's the advantage that you have, is you could pick whatever group or not group or short, whatever you want to do. You could do it as a retail trader. So that's how I like to have it. I like to be a little bit more, my goal is when we do sell off, right? For that particular day, I want to be more on offense, right? I want to be actually like looking at names that maybe I've taken some profit targets in, and I want to be buying the dip in a couple of those names. And here's another thing that I just wanted to stress to you, which I don't have this chart up anymore, but I will bring it up. Look at the 52-week highs today in the S&P. Now, again, this is just the S&P. I'm not looking at the NASDAQ, which is going to be have more tech in it. But if you look at the names that made a new high today, it's not all growth, guys. These, to me, what leadership is names that will break out to new highs, and then consistently grind higher, making new highs, and maybe pull back to the 20-day moving average, break out to new highs again, pull back to 5 or 20-day moving average, break out back out to new highs again. Right? Those are what's known as market leaders to me. Other people define market leaders other ways. That's fine. I don't really care about that. Because I see some people calling market leadership after a name rallies for 2 weeks. It's a leader. Okay. Has it made a new 52-week high? Right? How long has it, been up near the highs for? In any event, you could discuss that on your own. But let's take a look at a few of these names that are making new highs. So Netflix, absolutely. Do I think this is a market leader? It was one of the first names to break out to new highs. Growth value doesn't matter. Also, notice how shallow the pullback was in Netflix. This is exactly what I'm referring to. The really strong leaders, they don't stay down for long. And, a little bit of a dip there for a couple days and right back at new highs. I would definitely classify Netflix as a market leader. Let me just bring up I'm not going to go through every one of these names, but HWM, right? This is a name that sold off a little bit. Finally, it finally broke down a bit, right? At the beginning of April when the market took its last leg. But what did it break its 200-day? Whoops! Whoa! What happened here? Did it break its 200-day moving average? Nope, it didn't break its 200-day moving average, and most stocks did. The S&P did, right? And then it had strong earnings to boot. Market very easy, right? It should be very easy for you to tell that, especially with the difference in the S&P. Market leader. How about this one? Schwab made a new high today. Market leader? Probably, I would think so. Maybe a little bit harder because I don't know if the stock is at, maybe that is all-time highs. It's not at all-time highs. It's close. But would you say just by the price action, if I covered up the symbol, Schwab or Hood? What's a market leader? Well, I don't know. This one's kind of tough. I would say Robinhood may be a market leader, but I don't think it's there yet. Is it showing really nice strength and is it acting well? Absolutely. And I'm long Robinhood. I'm not long Schwab. But I have to say the Schwab chart looks is a bit better. So again, don't be fooled by popularity and about people telling you, oh my God, it's a market leader, right? It's exhibiting some characteristics of market leadership, sure. But to me, a market leader is breaking out to new highs. What about this one? GE. You think this thing's a market leader? Right? I would say so. Very, very strong, good earnings right here. Um, and a difficult time to, I think, report earnings. Did it break finally in the beginning of April? It sure did. But look at how it was almost like keeping a beach ball underwater, right? Right back up, right? That to me is a market leader. Very, very good. Any other names that I want to point out here? Let's bring up Merck. Not Merck, looking at the new low list. Let's bring up Deere, which had earnings today. And, I don't know if I would classify Deere as a market leader. Perhaps I don't think, same thing, all the way down to the 200-day moving average. It's not the fastest moving stock in the world, so you could criticize it for that, right? By the way, you should always be judging stocks like this, right? You should not allow a stock to sell you, right? Or am I saying that the right way? You should be very objective about the names, right? You shouldn't be defending a name necessarily, in my opinion, right? They should be very good setups. Price actions should be very good in order for it to demand your money, right? You're at the controls here. You can go decide which names are the best of the best that you can belong to. So I thought I would just be very to kind of talk a little bit, bigger picture and about how many names that you think you can manage. Being that we've had a nice rally, I wouldn't be surprised. I don't have a crystal ball. I'm not calling for a correction or a dip. But what are you going to do if that does happen? What names are you going to add to, right? What names are you going to have to play defense in and sell as they're going down? Right? All of this and I bring up these questions because you can make adjustments, right? You could cut your positions if you don't have as many, if you're holding 12 names or 15 names and you really only have high conviction in maybe 6 or 7 of them, then maybe think about those other names and what you're doing with them and what your plan is, right? Have a plan for what you're doing. All right, guys, that is it for today's video. I'll just wanted to kind of keep it short with the strategy. Have a great night and see you tomorrow. Again, don't forget that tomorrow is monthly options expiration. Have a great night.